Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Aquestive Therapeutics, ticker symbol AQST. But I'm happy to take any ticker requests during this live stream. I'll be doing this for about an hour. And yeah, and if you do enjoy this kind of content, stuff like that, make sure you like it and share your thoughts in the comments below. Always great to engage with you guys in the comments, get your perspectives, and bounce ideas off of each other. And of course, subscribe to the channel for more content like this. And so I wanted to start with Aquestive before getting into any requests, just because I had a really nice interaction with somebody in the comments, I believe today. I'm a little mixed up because I've been working the night shift, so I don't know if it was yesterday or today, to be honest. But I got a comment about, I made a video on this, suggesting that there's this nice, inverted head and shoulders pattern. It's, on a slant, but it definitely looks like it's there. And I had highlighted these levels that price might pull back to. And I believe it was yesterday. I believe it was on the 10th. Somebody commented, hey, thanks for the video. I picked up some shares at 250. Excuse me. And that made me realize, wow, I have a really bad habit of making videos on stocks that I find compelling, I find interesting, but I don't personally always partake in them, and I don't always place limit orders at levels that I identify. And I realized, wow, this is one that I should have placed a limit order at 250. Because, I saw that this is, at the neckline, or it was at the neckline at the close of January 9th. I saw that it might be breaking to the upside, and that, I didn't want to be late getting into it. But, as I had suggested, there were pullbacks to below 250, and not coming to 228 exactly. The low today was $2.32. But so I, thanks to this comment, realized, oh, I should, add a little heavier, at 250, place a limit order there. And so I did that. And for me personally, not financial advice. This could, be a terrible investment decision. But, I now have a larger position than I was planning on, I guess. Initially I was just planning on DCAing pretty slowly, passively into it, 250 a share. So easy to do. Anyways, I got a bigger position, and I'm excited about that. And I should, if I find myself compelled by some of the charts that I go over, I should, be more active in placing orders at levels. And really, like, let's say, I want to establish a position of, let's say, 300 shares, or let's say 400 shares. Or maybe 500 shares, just to do the math, Basically, if I see this at the neckline, oh, maybe it's going to break out. I'm going to buy 100 shares there. Okay, but I have these other levels marked. Maybe it goes down to this one by another 100, this one by another 100. And then if worst case scenario, it comes down to this red line, maybe by 200. So then the max buy is down there. Something like that. I'm just making stuff up as I go with this. But yeah, I think that's a good way to trade, is to, average in, but not, oh, it's down today, add a little more. But, this is a key level, 250. Have a limit order there. 228, a key level. Have a limit order there. If it doesn't get filled, that's fine. But at least, you're establishing a position at levels with the expectation of this inverted or inverse. I always say inverted, but technically it's inverse head and shoulders pattern playing out. I want to have a position there. And I should also note too that, I try to post stuff on the community page. And so let's see, on the community page, I did just post, oh man, the screen's frozen. So glad I switched over to this so I could see that. But yes, there we go. Yes, this is the community page on the channel. And I've shared this video on Aquestive Therapeutics. This guy, Stocks Wizard, does a great job diving into due diligence of Aquesttive. So I'd recommend checking that out. I was originally thinking about doing a due diligence video, but he nailed it there. So I'm not gonna do that. I'll just do TA over the weekend and also probably the book review I've been wanting to do. And TMF, yes, happy to do that. I believe I have this in some. Yeah, so this is the 20-year Treasury years 3X bull. Yeah, so and I think I actually, yeah, I have this on the, I believe, indexes list. Yeah, right here. So and I think TLT is the non 3X leveraged. So this has come up like with natural gas, looking at UNG, which is natural gas not leveraged, United States natural gas, and then BOIL, BOIL, which is 2x leveraged, and they don't always move in the same way as you would expect as far as the commodity or the what is this? Sorry, the treasury yield. Don't always move exactly in the same way when they're leveraged. So might also be good to look at TLT because this one, let's see, I believe has not. This is, yeah, I don't think it says anything about leverage here, whereas TMF is, I think, 3x. Is that right? Um, but yeah, so looking at this, um, I am not the best at understanding treasury yields, stuff like that. So I probably can't offer too much advice on this as far as just, understanding the background of this. But what I see looking at the charts is it looks like there's this lows over here that kind of correspond with the current price. And so I could see that it's forming a bottom here and could continue higher. Um, but it doesn't look like, because this is a bottom over here, it's like getting to this, volume. It's in this volume shelf right now, but if it goes much lower, like if it goes to like 55.30 or like 55 and a half, there's not much below that. And I feel like that could be kind of a precarious situation. It does look like there's this gap here. It's like $54. Um, so yeah, especially with this being leveraged, it's tough. If I look over at the non-leveraged one, I guess I did some. Yeah. Okay. So this, somebody else had requested I look over this in a live stream, and yeah, what I had looked at was basically this downtrend. I guess I thought I did it on the weekly, but I guess it's not lined up perfectly with the low here. So I probably did this analysis on the daily. Let's see. What's that based on? I guess I just didn't lock it. Yeah, no, so this is just a rough line. And I'm going to look at it on the weekly. Let's see. And so, yeah, what I see with this is, there's this low on June 17th. So I guess the week of ending middle of June 2022. So let's look at, yeah, so there's this similar down low. And so if I draw a trend line from that, and then connect it here, does look like, it has been respected with bounces here, bounce here. So I could see that, let's see, and these are all pretty rough lines. I mean, this doesn't look so great because it is lower than over here. I mean, even based on the low, it's actually, I guess technically it's a little bit above the low. But yeah, it's like really like the low of here seems like that's like kind of like the last line of support, and then it could just be continuing down. But I had this here because I think this is kind of like inverse to, let's see. SPY here. So this has gone up since January 5th. TLT a little bit delayed, but it's kind of, inverse with the market, and then here, middle of or the end of October, and let's see, SPY, end of October. So yeah, I mean, I could see that this is, yeah, okay, so I should say, I mentioned that this, oh, I'm moving that, oops. That's why I gotta lock stuff. Like I could see it coming down to test this trend line. And I think that, yeah, I think that if you're gonna do technical analysis, TLT seems like a better way to do that because it's not leveraged. And yeah, I mean, even like I screwed this line up, so I would say this should be connecting to here, but you do have dips there, whereas with TLT, yeah, so I guess that's, drew that kind of the same here, like that. So that's how I would do that. Kind of wonky. But yeah, what I could see, I would say TLT is a better way to look at this, is that the SPY is, at 478. Let's see what the SPX is, which is, I think, better to compare to directly with the S&P 500. So basically, this has had a high of like 4.8K. We're almost there. I could see this going past that, hitting a higher high, and then pulling back, and then counter to that, if the SPY starts turning around, if it starts coming down, I would think TLT and TMF would also be turning around. And so I could see while the SPY runs up, or the SPX runs up to hit that higher high, I think that this TLT could be coming down to this trend line, which would be at, let's say, 90 to 93 dollars. TMF could be coming down to, let's say, this line 55, maybe lower, maybe to 50. But again, tough to compare with stuff that's leveraged versus not. While the SPX hit that new high, this will hit a low, probably not a new low, and that could be the inflection point. As the SPY turns around, these will turn around and start going up. And so these are not plays that I'm in, I think largely because $100 a share, $60 a share, I'm a smaller fish, so I like to go for cheaper stuff. One thing that I think is pretty interesting for shorting the market is SOXS. Only $6 a share, but this is pretty similar to like the SH, which is short the S&P 500. They have a very similar structure. And here, I can see it like that. Yeah, pretty similar structure, but this is 3x leveraged, and it's cheap per share. So I think that I've been accumulating SOXS as well as SH as well as SQQQ. And by accumulating, I mean every week I add a small amount more, nothing crazy. But I think that these will continue to dip along with TLT and TMF. But I think they're near bottoms before rallying a lot. Do you use the EMAs? I don't use that's the extended I usually just use like the simple moving averages. I can throw up the EMAs. Let's see. Here, let's see. So there's, I think that's so I'll look into EMAs for future videos. I don't know. I don't know how long it will take me to find them on here. But that's definitely something I'll consider. I usually just kind of like throw up moving averages just as kind of like, guides, but I don't weigh too heavily on them because I feel like they're usually lagging indicators, or they are lagging indicators. So it's like, oh, you get a golden cross after the high. So I think that they're nice to check, but I don't really find moving averages to be terribly helpful. I don't put a lot of weight on them. But yeah, so there's a question. They're saying a polar vortex is going to hit part of the U.S. Is it a good time to get into UNG? I think that natural gas is really interesting. I've closed my position. I had one in, let's see, in Boyle. And, I've done this retracement with them as well as UNG and cold is the 2x inverse or 2x short. I'm going to pull up the natural gas chart here because I think this is a better way to basically look at levels and then relay that to UNG and or Boyle and or cold. And so I closed my position in natural gas. I think on this day when there was looked like this blow off top, I made a video on it. So you could actually check out that video if you want to see kind of my perspective, I guess in more depth with it and relating that to UNG and the others. But there's this debate on Twitter I've started following. Let's see. I'll pull up Twitter here. People that I think are pretty interesting to follow. I found, let's see, Gassino is this person that I've been following who I think that she does really funny person, pretty sarcastic. And I think that they're a good person to follow. I also started following this person, Josh J. Trades, who is very anti-weather correlations with natural gas. And really that's kind of like a function of, is it correlation or causation? And I think, to me, it makes sense that the price of natural gas would go up in winter when everybody's got their heat on, all that stuff, polar vortexes, instability in weather. But, it's probably more of a correlation than a causation because there are natural gas reserves, storage, and so these things we're prepared for this kind of weather. So I think it's tough to. I'm glad you like the videos, so with natural gas, I just think looking at the chart and whether or not there's so for me, where I'm living, it's going to be, let's see, I'm not excited about it. So my birthday's on Tuesday. I'm going to do a live stream that day. But I kind of hate my birthday because, let's see, the low in the temperature on that day is negative 18 degrees Fahrenheit. That's the lowest temperature in the week. And so that is, I imagine, factored a part of the polar vortex. And yeah, January sucks. Looking at the chart, though, I see this blow off top. It was rejected from the 618 here. And so I view this as, it needs to find a new bottom. It does look like the 382 right here could be acting as support before the next leg up. So it's quite possible. But it could also be retracing down to the 236, which is right around where this gap was. And there's a lot of consolidation there. It's possible, though, that this consolidation currently happening will be that new level. And so for me, I think looking at UNG, what I had done is I think I have a very small order. This is the weekly chart. I have a very small order placed, at the 382 retracement, which is the at $5.67. So whether it's related to weather or not, I'm just waiting for that level. I'm going to do a reanalysis of this over the weekend, and so that might factor into what goes on with this. And part of that reanalysis, I'll just do it here, is so I did this Fibonacci retracement from the high down to the low. I just made a video calling this a blow off top. So now we can do a new retracement from the low here to the high here and get an idea of that. And so I'm just going to do that. This is going to be approximate. I'll go over this in another video. And so it's kind of tough with the overlapping colors. But the 382 retracement is, corresponding with this one. And so I do feel like not only is that a retracement from the downside, that is also a retracement from the top side, or going up, I should say. And so I do feel like $2.76 does seem, or 77 cents does seem like a pretty compelling level from that respect. And then let's see, also the 618. So yeah, I could see both of these levels being significant because not only is it a retracement from the downside, but also from the upside. So I think that what could be done is, if you're interested in if you're bullish on natural gas, whether it's because of weather or because it's winter, or you just believe in the commodity, I think that the level here and the level here, these could be like build half a position here and then build the other half of the position here if it goes that low. And then you would have the average right in between at the 50% retracement here, and that could set you up for the next leg up. The forecast of natural gas for the year of 2024, I have posted this article, I think it's from NASDAQ. The forecast, is for the average for the year to be 350, which is up here. So I think there's plenty of upside. I just saw this as being a potential pullback, and that's exactly what we saw. And so I closed my position. And so if we do the same thing with UNG, do a retracement, let's see, I need to get the drawing tools here. Do a retracement from the low here to the high here. What levels seem to stand out? And so I would say this 50% retracement, because the UNG is, it should be 1-to-1 with natural gas, but it's based on futures data rather than the price of the commodity. As far as I understand, I need to actually do a video on understanding futures because that's what a lot of commodities are based on, and I don't really understand them that well. I think it'd be great for all of us to learn more about them. BOIL is 2x leverage. So this one only didn't even go up to the 382 retracement. UNG went up to the 786 retracement, whereas the commodity went up to the 618. So they're all different. They all have to be factored, treated differently. And so with UNG, I see overlap with the 50% retracement here with this 382 retracement. And so I feel like price, I am more convinced at buying UNG down at 570, let's say. And then let's see, this 786 retracement also aligns with this gap that was created, consolidation below it, and that's at a price of $5. And so that would be probably the next level that I would want to add in. So maybe, or potentially do like half a position here, and then a quarter here, and then if it does come down to 5, double up on it. Yeah, BOIL has and you can look at so if you believe in natural gas long term, you can look at, the chart here. It looks very different from looking at both UNG and BOIL. They all have decay. So you don't want to BOIL, UNG, you don't really want to be holding them long term. If you have a thesis that it's going up because of a polar vortex, or it's going up because of weather or winter, you want it to be a short term thesis. That's why with BOIL, I exited my position, and to be honest, I had orders set for 41.31, but I was like, it's probably not going to make it that high. I should close out taking a little bit of profit, and I did. And it sucks. I could have made a little bit more on it, but if I would have left my order at 41.31 or even 41, what was the high on that day? The high was $40.70. So even an order at $41 would not have been filled. I'd be left holding the bag right now. So yeah, there are a bunch of comments about this. So I'm just going to check the comments again. So as far as the EMAs, 5, 13, and 50. So yeah, I'll look into using the EMAs to see if I can add them for charts, which I will probably I don't always use, one of the reasons why I don't like using the moving averages is because it throws off the y-axis. So it's something that I do check. But yeah, I'll look into those. That the EMAs follow the tech sector. Good to know. I do follow a good amount of tech stuff, like Luminar is a company that I think is really interesting, that I cover frequently. So Polar Vortex, so UNG. I appreciate going over this. I love watching other people's technical strategies. Yeah, and so that's one of the things, I feel like I need to be a little bit cautious. I don't want to be saying if something's going up or down because I'm just another perspective. I'm probably more at least at this stage of my trading level, I'm probably, with this technical analysis, I'd say at best 50-50 with my analysis, but some of my stuff is spot on. With what popped recently that I looked at. I made a video. I think it was a Canoe, GoEV. I saw bullish divergence, and then that popped the day after. Okay, so sorry, I'm catching up on the comments. So give me a second. What's your take on ChargePoint and Fisker? Yeah, so Fisker, I'm definitely doing an update on the weekend. I wanted to do an update on it today, but I have to go to work in an hour and a half, so I just don't have time this week. It sucks. But yeah, so let's look at Fisker over here and ChargePoint. So let's see. Fisker, yeah, so I think in the last video that I made on Fisker, I pointed out I am not and was not short Fisker. But just, thinking about it from a psychological level, if I'm a short seller and I see this downtrending pattern and prices, around $1.40 and it's making new lows, get this big run up, my goal after when it runs up like this, I'm going to short this down to $1 because that's like a trophy for me. If I can short this down to $1, that's good for me. And so in the last video I made on Fisker, I said that, if I was a short seller, I'd try to bring it down to $1 or lower. That's exactly what happened today. Could it go lower? Yes, most definitely. But I do think just $1 being a psychological level, it closed today above $1. This could be the bottom. $1 could be the bottom. I do think that there's a lot of upside potential for it. They're starting to do deliveries this year, doing the dealership type stuff. So I think that there's a lot of potential for this company. And, now is really the cost intensive part of, or really the past, I feel 6 months probably for the company has been really cost intensive, manufacturing the vehicles and delivering them. And they're starting to do that now. And so, yeah, I think that it's probably going to be, what you want to see is what we saw over here. We saw it flatten, it respected that level, and then it ran up. If you want to hold this long term, this was not the time to take profits. But if you're swing trading this, what you want to do is wait for, okay, it's consolidating, it's finding a level, and then, it's not that crazy here, but you see a little bit of an up increase in volume, and then, yeah, that big takeoff in volume. And I had pointed out this bullish divergence in the chart with downtrending in the lower lows in the price, higher lows in the RSI. That's an indicator that you're going to get an upward move. That's exactly what we saw. But then this, it's a blow off top. Couldn't make it above $1.80, which I had identified as. Actually, I probably did this after the fact because it corresponds with the open of the following day. But that to me just looks like, and then it closed below. Even this, $1.63, that was an opportunity to sell. This just looked bearish after that, and I should have pointed out that this is a blow off top. This is a pretty gigantic bearish engulfing candle. I'm getting better at the technical analysis as I do this. That would have been a good opportunity to sell, and then add. This has just been such a steep downtrend. Right now, it's like you're buying a falling knife. And so what you want to see is sideways consolidation like this, and indications that it's not bearish consolidation or a bear flag. And so what we want to see now is we don't want to see any closes below $1. And so that's my perspective on Fisker. I will also look at ChargePoint that was requested. And so ChargePoint at $2. Yeah, so I think I believe the last video that I made on ChargePoint, or the videos that I've made on ChargePoint, I've gone over Max Pain and how in January, I'm not sure which week it was in January, but most of them are $2.50. So that's, you want price, if bulls are in control, price on Friday will close above $2.50. If bears are in control, price will close below $2.50. But 1 week in January had a max pain of $2 per share. And so that is suggesting that, like tomorrow, let's look at the max pain for it right now. Let's see. I'll do it from here. Max Pain. This is maximum-pain.com. I look at this website all the time, and I find it really useful. So CHPT for this week, we've got max pain of $2. Not surprising given the current price. I do think it is good that ChargePoint closed above $2 today. This is a bullish hammer candle, so I do think that's good. Although the almost 9% drop yesterday, not so good. But yeah, so this is like, $2. It's probably not going to change much tomorrow. It's probably going to close around $2 tomorrow. But let's look at it in the future. So this is for the monthly contracts, $3.50. So this is, it's, in all honesty, it's going to close below $3.50 next Friday. So that means bears are in control. But the fact that Max Pain is notably higher than the current price, that means people generally are bullish on ChargePoint, but that also is reflective of, since monthly contracts, people get those further in the or with longer time horizons. So they might buy it, when it's at $3.50 and say, oh, in January, this is in October, in January, I think it's going to be above $3.50 or above at the current price. And so they buy those contracts. But then if we look at the week after, January 26th, I believe it's $2.50. And so I made a video saying that basically any price that's below $2.50, I think is a steal for ChargePoint. What it looks like with this depends on what happens, in the next couple of weeks. But with, tomorrow's Friday, it's probably going to close around $2. Nothing we can do about that. It does look like potentially it's forming a double bottom here, and this is higher lows. Whereas, let's see, what do we have with yes, there's no bullish divergence or anything there, but this could be, forming a double bottom. And if it's forming a double bottom with a higher low, that could be a great sign. And so I view that, if you can get your average down below 250, then I think that it's going to be going above 250 because the max pains are saying we go to the next week. What is it? $2. So maybe this is not a good example. Next week, $2. But then the monthly for February, it's probably going to be higher, $2.50. So yeah, I think that ChargePoint is a steal at the current price, especially if you have a long-term time horizon. I think it's a steal. But that's, I'm biased. I hold ChargePoint and I've been holding it for a good amount of time, kind of like passively dollar cost averaging in from up here, I believe. Actually, I started making videos in October, and that's when I started DCAing with ChargePoint very passively. But then when there was this drop down, I started buying heavily. And so ChargePoint and Fisker have gone over those. Do triple leverage stocks have decay if you hold them for a long period of time? So as far as, so I'm not sure as far as whether if it's leveraged, if it is, but I just from looking at, let's see, like the Nat Gas charts, just like UNG, which is not leveraged, this one definitely has decay. This is like, I mean, we look at this on the monthly time frame. This has decay, and it has nothing to do with leverage. And so I'm not sure about that, but I know that holding on to these is risky. So let's look at 3x leverage. So let's look at the TMF 3x leveraged. Let's look at this on the monthly time frame. Does this look like it has decay? No, it actually doesn't. It does. Like this to me just looks like because the price over here is not ridiculously higher than current price. This is like 65, 70 bucks over here. And so what I think this is a reflection of is just that the SPX is, at all-time highs, potentially forming a double top here. And so I think that something like TMF, whether there is decay or not, I think that this is something that you could hold for the long term. And like I could see this coming up. Let's see, this is the monthly chart. So, you could be holding this for years. And so I don't think that's as much of a factor, but I don't really know. I'm just spitballing based on, what I see in the charts here. Okay. Yes, Boyle has decay. As Vic said that. That's clear. Fisker and ChargePoint holdings. What's your take? So I just went over those. So hopefully you were watching the stream when I went over those. Yeah, UNG, yes, has decay. As far as, what the chart suggests, that just based on this, it's got decay. And then, so could you look into Palantir and SoFi, please? Yes, and I will note that I did just put out a video right before the stream going over 5 stocks. SoFi was in that, so you can check that out. And I did partition it into chapters, so you can skip to the SoFi one pretty easily. But there are other tickers in it that are pretty interesting. Palantir, so I'll start with that, and then I'll look over at SoFi. You've held, and since I was just going over UNG, I'm actually going to go over Jay's comment here. I've held UNG for 6 months at a time and never experienced any decay, so I just don't understand where it comes from. So I just think it's like, let's see, I know that with Boyle there was I think a reverse split, and so I don't know, chart layers, corporate actions. Yeah, so reverse split here, 1 for 20. And so, and what I see, people talking about in the comments, is that, here, 1 for 10 reverse split. So I don't, if there is decay, it might just be that they just, I don't know. It just keeps getting reverse split. UNG, I don't see that. These are both pro shares. Here, looks like reverse split 1 for 4, so not as bad. And I think just too, I've covered Boyle initially, but that's because that was like my exposure to natural gas. I wasn't aware of UNG at the time. For me, moving forward, if I'm touching UNG, I mean, really, like if I start averaging into a position and it goes down really low, I could, get a lot of Boyle when it goes down, or, it's much cheaper to load up on UNG. I could just get my average down in that. So I think UNG is a much safer play for natural gas. But as far as long-term holding, I have not held it for super long. I could see, what we're experiencing now with winter, with the forecast of natural gas, being going up to 350, that being the average for the year, returning to these highs. I definitely think that BOIL and UNG has potential for the future, but I just think that they're kind of risky to hold long term. And so, yeah, I'm going to go over Palantir real quick. Now let's see. My alphabet skills. Okay, Palantir. Yeah, okay, yeah. So I think I did do a video recently on Palantir, and basically I wouldn't necessarily say I'm bullish or bearish on Palantir right now because there is still this gap to fill to the downside. I put out videos on entering this gap and that I do think it will be filled over time, but I do see that with this gap trend line, this trend line that has served as support, this thicker white line here, I do see that as like there's a convergence of those levels here. I do think that will serve as strong support. But one thing, looking at the chart, just going to do like a little bit of a time measurement here. We have, this is not paying attention to the upside, but this is like 36 bars, 39 days, roughly here coming from the low here to the low here, like the orange lines. So this is from, when it gapped up following earnings, beginning of November, coming back down, beginning of December. So that's a month. I'm going to move that box so it's not cluttering it. So it had this, this move, but it then retraced back to that level over the course of a month. And then here, back at that orange line at the beginning of December, this move up, and then it retraces back to the line at the end of December. And so what I see now is it came down to around 16 bucks, and I think that over the course of January, and it might, be short-lived. It might not go all the way through January. I think that we're going to see another approximate month-long bounce, and that around the time of middle of January, which is around now, next week, I think that this will be topping out around 17 bucks. I can't partake in all the stuff that I go over just because I cover too many tickers. But I like Palantir and I wanted to partake. So at 16, I think 15.98, I bought one share just to kind of tag along and thinking, I think this is going up to 17.10 to fill this gap or this level at 17.21. I think it's going to go up to around 17 bucks before coming back down to 16. So when it gets up to 17, I'll sell that share, make $1, nothing crazy, but just kind of, following through with my analysis, having more conviction in it. And yesterday, I believe, what was the high today? High today was 16.93, but yesterday it broke above 17, hit 17.03. That could be the top before returning to 16. But I do think that it will move up to this orange line around 17.20 before coming back down. I do think it will be returning to 16 around the end of the month. Might be earlier, might be later. But I do think it's going to fill this gap at some point, which is coming down to around 15 bucks. So those are my thoughts on it. Long term, I think Palantir is an incredible company, and I think that it's a great long-term hold. I don't think there's a wrong time to buy it if your time horizon's super long. For me, I'm trying to get better at not day trading, but swing trading, like on a weekly to monthly basis. I want to be in and out of positions, focusing on taking, focusing on the percentage gain. If I can make 10% on a trade, that's good. If that 10% is, $10 or, a few dollars, whatever, it's just practicing getting that swing, that percentage gain. And then once I get more conviction in my analysis, then to start going heavier on those swings. So I'm really just trying to practice my discipline. I'll touch on SoFi, but I did just put a video on that out on that, so I'd encourage checking that out. So basically, it's all of these stocks. I think actually I have that in my daily list here. So I went over Chewy, Matterport, SoFi, Block, and Stem. And so with SoFi, in all of them, it's really like they've returned to these levels that I have identified. It looks like that those levels are serving as support, but it could be bearish consolidation. I think with SoFi, I'm torn with it because I feel like this is one where, I've identified these gaps to the downside in this downtrending channel. I think it's eventually going to return to this channel and fill these gaps. And so I lean more bearish with SoFi, but I didn't think it was going to break out of this channel, and it did. And it's such a strong stock, great company. I feel like it's going to go up, but based on my interpretation of the chart and like this gap in the volume here traded, I think that it's probably going to go down. I think that 814 is an important level based on the open here, and just you got let's see the close 1813 right around that level. It's right around there now at 8.7. Sorry, I think if I said 18, I meant 8.17. But I do see like $7.88 as being kind of like the end of this volume shelf. Below that, it's kind of this precipice that it might be dropping down to like 750 or 730. But I do go over that in the video, so I'd encourage you to check that out. And so I saw the comment on UNG. Yeah, more money. You're welcome. What about Faraday Future Intelligent Electric, FFIE? I think somebody had mentioned this. I believe I had searched it, and it to me looks like it's, in all honesty, a company that's like it's dying. I don't know. I'm sorry to say that. I think that this is incredibly risky because, I mean, you could see this. There's this consolidation here, and I mean, there's no volume, and then you just get this crazy spike. And so, like on that, like you could buy it here, and get a rally of like 50%. But if you don't take profits on these days, you could get a profit of 75%. But if you don't take profits, you could be left holding the bag, being down 30, 40% with no end in sight because, maybe you buy it up here and then, there's potential to make 50% gain. But then, fast forward to the future, now you're down like 90%, 80, 90%. So I think this is incredibly risky. I do think, though, that because it is consolidating here, let's see. I'll try to give you some perspective. It's not like, let's see, what was the close here? The close was 1591. So yeah, I happen to mark that perfectly. Let's see. This potentially could be a double bottom. And let's see, let's take a measurement. Let's take a measurement of how long does it take? How long did it take between these? So this is like basically when it returns here and it's flat, that's over the course of 6 days, and then it goes up. And so from here, I'd say I have no idea, but maybe on, let's see, wait, how did I, yes, so here, so Monday, because actually, no, this is, the market's closed on the 15th for Martin Luther King Day, so this space should actually be the 16th. And so I would say that on the 17th, based on the number of candles here that were down, 1, 2, 3, 4, 5, 6, 7, actually, yeah. So I'd say 1, 2, 3, 4, 5, 6, 7. This should be the 16th. And then on the 17th, you could see a big move up. But it doesn't always happen like that. Like over here, you've got, let's see, from like the lows here. So I guess this flat day, I'm guessing it's 14 days, 13, 14 days. And then you get that move up. So, and from what I understand, 7 is a pretty common number, so that, whether it's 7 days or 7 times 2, 14 trading days, these things happen in patterns like that, in cycles. And so, yeah, I think FFIE, I think on Wednesday next week, you'll have to, hit me up if I'm right, because I'm not going to be paying attention to it. Actually, here, I don't always pay attention to my alerts, but I'm going to create an alert for, I'll do 30 cents. And we'll see if that gets triggered. Wait, 30 cents? No, that's too high. Sorry, I'm not used to. Let's see 25 cents. I have no idea. I'll do 24. 24. This is totally arbitrary. Where is this level? What like is there any significance to this level? Just, yeah, so I mean that's like you got resistance over here. So let's say maybe it squeezes up to 24 cents. And actually, maybe, for shits and giggles, that's a 50% move. Maybe, you could. So for me, if something's trading for less than $1, I have to buy 100 shares. I can't buy any less than that. So this is a $17 purchase. Shits and giggles, who cares? I could do that with the expectation that this is going to go up to 24 cents. And so that's like a 50% swing. So yeah, maybe I'll do that for shits and giggles. Maybe, I don't know. But I'm fully all right with losing $17 on this because this is just, dying. So extremely risky. I do not recommend it. I recommend staying away from this. But for shits and giggles, kind of the 7-day measurement, I think it's interesting. Boyle, for example, so from Nameless, has had several reverse stock splits. Yeah, I did mention that. Yeah, which is odd because like UNG has not had so many reverse splits. I did see one that's a 1-to-4. But yeah, I mean, both of them just like, have just faded so much over time. So yeah, I mean, I think that UNG, you got to have like, I feel like a seasonal time frame on it. Like if you start a position and 3-4 months later, and you're if it's bleeding, you gotta have risk management with these, and yeah, so it's serious. You can, yeah, because somebody told me with Boyle that they had an average of, goddamn, this is so crazy. Monthly time frame, I need to do daily. That they had an average of like 100 per share, and so that's like, let's see. So that's, this right here, 75, 77, that's acted as resistance a number of times here. I feel like this stock's never going to go above those levels. And so having like an average of 100, it's just either, you got to heavily get your average down or cut the losses because it's just going to continue to bleed. But yeah, not financial advice. Cool. Yeah. And I've done like, and I do have a lot of, I sometimes I forget to add to them. Like I have a Matterport playlist, but it only has one video on it now. I've done 3 videos that either focus on or include Matterport. But SoFi, I've covered a number of times. There is a playlist on SoFi. It starts with the newest video. All of the playlists should start with the newest video and then go back to the oldest one. And so you could look back and see, are my calls right? Really, I try to give a bearish and bullish perspective. I try to be non-biased, but it's tough. And especially like, like I think one of these, like Chewy, I saw this downtrending channel. I thought, oh, that looks like it's a bull flag. I think it's going to break to the upside. It didn't. And then it's doing that again. And so, yeah, I mean, I think for this one, because the volume's increasing, whereas here, in this one, volume was not increasing. It's also the end of the year. And then people start selling off at the beginning of the year. I should have thought about that. But with this downtrend, volume's increasing. So I think you want to be paying attention to the volume with this, not only the RSI. But yeah. Yeah, so there's tons of stuff on the channel on SoFi. Oh, yeah, Jay, take care. Sorry, I'm seeing this a little late. So, okay, SoFi has earnings in 2 weeks, and if they become GAAP profitable, it might even end up filling the gap upside. Cool. So earnings, end of the month. Yeah, so I think, basically with earnings coming up, what I could see is there not being too much going on up until then. And so it could just consolidate here until then, and then you see the big move up. And I think that at that point, that's a good, thanks for pointing out the earnings. I'll definitely have to do more updates on this, especially getting closer to earnings. Because, yeah, if there's this gap to the upside, like while I see these gaps to the downside, I do think that they will be filled eventually. I feel like, yeah, this is a pretty big gap. So I would be surprised if this big of a gap was left behind before coming down to these levels. So yeah, I mean, but it's tough to say because like unless there are really clear patterns, like for me, one that's really clear that stands out to me, I'm really excited about it. AQST, inverse head and shoulders. It is at going on an uptrend neckline, so it's not ideal, but that just looks like a beautiful, beautiful pattern. And so I feel like this pullback right now, closing above 250. So 250, I feel like is an important level. I think this could be going up a lot. And so I believe, yeah, I have a target based on this head and shoulders measured move up to $4. So I feel a lot, very confident in that. Or I should say I have conviction in my analysis, but I could be wrong. With these patterns that I've gone over in this one, like SoFi's, it's tough to say. It could break to the upside or downside. And so, all that I can do with that is just provide levels that, if this does break lower, I think $7.88 or $8 just being a psychological level, I think that could be like the last line of support before going down to 750. But then, yeah, moving to the upside to fill that gap there at 950. And yeah, and so I actually don't know what GAAP is as far as SoFi goes. So I'll have to look into that and definitely do an update maybe over the weekend. So I'm actually, so this weekend, I plan on getting back to 4 videos a day, hopefully get more than that starting Saturday for the next 5 days following Saturday because I'm not working Monday, Tuesday, or Wednesday next week. So I plan on getting a lot of content out. Hoping for a squeeze. Yeah, is that more money? You were asking about FFIE. Yeah, so I'll have to, yeah, for shits and giggles, I'll have to try and get 100 shares, throw down $17, and see what happens. Fully expecting to lose that money. But yeah, with that, I should say, what I'm talking about is that here there was about 7 days before a move up. And so I could see 7 days being like Tuesday, Wednesday next week before a move up with a price target of $24. Basically, this being resistance here. And, I might be less greedy and maybe do it at like 22 or something. So not $22, 22 cents. Penny stocks, crazy, literal penny stocks. But yeah, and so I have a couple minutes left. I still need to make my lunch and eat some dinner. I got to be at work in an hour, and it takes me half an hour with the snow to get there. So I can't be on for much longer. So if there are any last minute requests, I see that there are 6 people watching. So great to have you all here. Generally accepted accounting principles is GAAP as far as SoFi goes, and that is also known without all the ins and outs to make the books pretty. Cool. Oh, okay. So that's just basically like saying they're good at their accounting. They've got that like certification or whatever. Cool. Yeah, SoFi is. I had traded that I think in 2022 a little bit, and I grew very attached to it. I was just swing trading it, so I'd take like 10% profits, wait for it to come back down, do it again. But then it had happened enough times that it's just like I can't keep doing it because I'm just going to end up losing the money that I made. So I walked away from it. And on that note, I might just pull up Lucid Motors because this is, so far in my trading career, this is the stock I've made the most money with. And, this looks bad. It looks down a lot. This is a daily chart. Earnings coming up on the 21st. So I guess is that a couple, I think it's a Monday. I don't know when it is exactly, but yeah. So, well, that doesn't make sense. It'd have to be the 20, weird. Because I think the 19th is Friday, so the 21st would be Sunday. So that's kind of weird. But yeah, this is just like, I'm glad I didn't, hold on to my darling, because I would have lost that money that I had made. And so I've kind of avoided this one. But let's see if there's anything that stands out in the chart. Like, I want to do an update video on this, but it just doesn't seem that, yeah, I don't see anything that stands out. Yeah, I mean, moving averages, the 21 days crossing below. Yeah, this just looks like I don't even want to cover this. I don't want to make a video on it because there's nothing that I could draw on it that makes sense. Yeah, and then let's look at the indicators here, technical signals. This is weird. It's just, yeah, so there we go. I have to zoom in to see them. But yeah, this is just, what are these saying? Yeah, moving averages. I don't know what these other things are. Moving average, crossover. Yeah, so this is looking like it has to find a bottom. But, with that being said, is there anything that stands out? So this is making lower lows in the price and the RSI. Yeah, so this just looks bad. Well, maybe if I look at this on the weekly, maybe, yeah, I mean, maybe there's, like, I want to feel like there's some falling wedge pattern or something, but it's all just, yeah, I mean, this is just, man, it's a downtrending level of support. Maybe it's acting as support here, but I don't know. I'm not too convinced. And here, let's see, like I blow off top, I'm going to ignore that. But yeah, we do, this could be a falling wedge. So yeah, I mean, this is, the time when let's see what the comments are. Soon penny. Yeah, I mean, people are bearish on this. When people are saying soon penny, that is a better time to be adding. I mean, but the bottom could be $2. Who knows? So I mean, really, you want to see a bottom signal, and right now, this downtrending level of support is really just based on 2 pivot points here, or a couple candles here, a couple candles here, a couple candles here, and then where the price is at right now. And so I don't really find that too compelling. What I would want to see is bounce. If this, I'm going to put an alert. If this goes up to, create an alert here, I'm going to do 375. If it goes above that, then that might suggest to me that, it's coming up to what's resistance here and potentially breaking out of this, that it has potentially found a bottom and could be breaking out, moving up to $6 a share where there's this volume shelf. So maybe that's compelling, but also really risky. Yeah, this, I think I was buying it, in this range here. I don't know exactly, but I think I was buying it, like following the squeeze and, in this range. And then I sold up here, and I had wanted to get back in, but I just said, no, I made money. I walked away from it. Let's see. So Horatio, what's up? How's it going? I just moved it up because there's an emoji, heart emoji thing in the chat. It blocks the text sometimes. Would I buy back and when? If you're referring to Lucid, so basically what I see is, maybe there's this falling wedge pattern, but it's pretty weak. I might actually do a video on this saying when I would buy back. And I've done a number of EV stocks, and I might put a playlist together on EV stocks that might be cool to just check them out as I update all of the ones that I've covered. But so what I see is basically like the lows here from like the end of December. This is the weekly chart. So this is the end of 2022. These two lows here And then I've got the two lows from November and the first part of November 2023. And so those are like the pivot points for this downtrend. Currently testing the bottom of that, but that level could be complete BS because it is finding new lows. So this could keep going. This could go down to $3 psychologically. That makes sense. It could go even lower than that. And so what I would see as being a potential buy opportunity is if it started to show some strength and came back to here, if I can, I have this alert at 375, because then that might coincide with breaking out of the channel and then also coming up to these levels where there's basically it's served as support, which would probably be resistance, but that would be where it's testing the breakout. And so I'd want to be alerted if it gets to 375. And if it does, then I'd really want to take a closer look and see, like here, these lines are rough, but it's like, that's a pivot point. But I want to see, is it going to break out of this this wedge, or is it just going to get rejected and keep coming back down? And so it really, and so with that, I think that if it did break out, I think it has a good amount of upside. And it's also cheap per share, so you could average in pretty casually. Samuel said, loaded up on AQST. Thanks. Yeah, hopefully I'm right. And that was made aware to me by, I believe, a guy on Twitter is named Mac Attack. He requested it, and he was pretty persistent about it. Unless somebody also on YouTube was requesting it, pretty persistent about it. I'm stoked about that chart, and so I'm just gonna go over this. I started with it in the stream, and then I'm gonna end on it because I have to eat some food, make lunch before I go to work now. It sucks, but yeah, this chart to me is just really beautiful. And also, I should note, I was going to do a due diligence on this company, but I had found this other video that was actually shared on Twitter that I posted on the channel, so you guys could check that out if you want to learn more about them. But just looking at this pattern, it's like this is the neckline. It attempted to break through, got rejected, but I could see this pullback. We've got these big tails coming down. With this, buyers are stepping in. You got those big tails down, and a 250 is being respected. So I could see this taking off, and the measured move from the top of the head, which is the bottom because it's an inverse head and shoulders, to the neckline would bring here. I'll do this. I think it's in the video that I made on it. But if I do, the measurement from the bottom here to the top, and just do like a blind move up. Actually, that'd be a move up from the breakout. So that would be over here. Where does that take us to? That take us $4. You can't see because that line. About $4. So I just think it's such a beautiful, beautiful aspect of the chart. And $4, I just put it up there as a psychological level. 369 is based on the low over here. But yeah, I think that especially if like you're interested in Biora Therapeutics, which I've covered, I feel like Aquestive Therapeutics is similar in that they've developed a novel technology. It's basically like a Listerine strip you put on your tongue, and that can give you epinephrine or whatever drug it is. And so I think it's just they're not just developing a drug; it's an application of drug. It's a technology that can be used in for other companies. So I just think it's a super, super cool potential. FDA approval let's see, I think I had this. Yeah, in the end of April, or I guess decision, I should say. But yeah, on the community page of the channel, I did post some videos that might be interesting. So I did cover Square in a recent video. I'd recommend checking out this video from Verified Investing, which is Gareth Soloway's channel. One of his traders, Ben Poole, did analysis on Microsoft and Square. I think it's really useful stuff there. If you're an APE, an AMC holder, I think that TWE, Trading with Emotions, does really interesting analysis comparing charts. And then this is the video that I wanted to come to. This guy, Stock Wizard, I should have said Stocks Wizard, oops, does a great job. It's an 18-minute video, and he really gets into the nitty-gritty, which I would not be able to produce a video as good as this, because I'm not familiar with diving into companies like this guy did. So I definitely recommend that. If you're interested in AQST, if you just recently bought some, I recommend checking out this video. He also gives good advice on where to find information if you want to do some of your own digging. But, it's 10 minutes past the hour, and I need to get eating some food and get on to work before it starts snowing here and whatnot. And so I'm just going to, I'm actually just going to, here, I'll pull up to the top there so you can see that. And I will say, if you like the content, make sure you give it a thumbs up and share your thoughts, whether it's in the live chat or the comments below, and subscribe to the channel. It's great to have you guys here. It's been a lot of fun, this stream. And the next live stream that I'll do is Sunday night. I'm going to get back to doing those weekly. I know that the market's closed for Martin Luther King Day on Monday, but I just want to get in the habit of doing live streams Sunday nights. And then I'll probably do I'll do a poll whether I should do Wednesday or Thursday night streams as well. It's fun to engage with you guys because I get ideas about stuff from these live streams and the interactions. And it's fun to be, trading in the community and stuff, retail traders. It's going to be a good year for us. I'm stoked. Great to be doing this with you guys. And so on that note, thank you so much for tuning in. And I'm going to put out an AMC video tomorrow. I'm going to do that every Friday after close, just trying to boost morale. And I'll probably get another video out tomorrow as well, but I'm going to start cranking out videos over the weekend, at least 4 a day moving forward when I get back to the normal work schedule next week. And live streams Sunday evenings and either Wednesday or Thursdays as well. And I'm going to do a special all-day live stream, market hours, a streamathon, because on Tuesday it's my birthday. Just be fun to do this all day. So yeah, I'll see you guys later. And good luck trading tomorrow.